There's decent downside here for a correction, a couple hundred points, so don't dismiss that. This is a really good opportunity to kind of rebalance portfolios, trim some risk, those type of things, raise a little bit of cash, because we're going to get some type of pullback here. The only question is, how big is it? Is it a mild pullback here to 57.50, or is it something that gets us down into the 5,600 range? I don't know. We'll see. But historically, these pullbacks need to happen when you're this egregiously kind of overbought on multiple levels. Let's talk a little bit about what you need to know before the bell this morning. So we've had this very, very strong rally from the kind of tariff liberation lows. So back on April the 6th, we had this announcement on the tariffs, and this is more onerous than expected. Market plunges. We were at 19.2% peak to trough on that decline. So right at the cusp of a 20% decline, which only happens about 13% of the time throughout history. So these types of declines do not happen very often. So they're important when they do. We need to pay attention to them. Since then, we've had a 19% rally, and we are currently about 2% off all-time highs. So just right there, right? We're almost have fully recovered this entire decline in just the last 3 weeks. This was a very, very strong advance. And again, from a momentum basis, we're extremely overbought. Relative strength, we're extremely overbought. This market needs a pause. Now, this morning, futures are pointing down about 1% on the back of this event of this Moody's debt downgrade. So we're going to see pressure in the bond market this morning. We'll see pressure in the stock market. That is not surprising at all. Only because things have had such a big rally that you should expect some type of reversal here. So this is, you need an event generally to bring some sellers to markets, and that's what's happening here, is that we've had a very, very strong rally, and nobody was wanting to sell because the market was just going up every single day. And it's like, well, I don't want to sell here because the market's going to go up tomorrow. Well, you need some event to break that psychology, and that's what's happening today a little bit. So again, markets will be down. I'm looking at futures, just 1 second, be down about 1% here at the open. So, we'll have a bit of a pullback here. And again, as we talked about before, what we want to see here is a pullback that holds this 200-day moving average through the end of this week. If we are going to make an advance to all-time highs, we need to kind of hold support here at this kind of 200-day moving average. So a bit of a pullback here today gets us kind of close to that 200-day moving average. We kind of flop around here for a couple of days, build some support at that moving average crossover, and then we can work our way higher. If we fail that, then we're going to come down here and start challenging the 20-day and the 50-day moving average, which the 20-day is now trading above the 50-day. So we've got good support being built here around 55.50-ish, 50 and 55.60, somewhere right around there. So again, there's decent downside here for a correction, a couple hundred points. So don't dismiss that. Again, as we've talked about before, this is a really good opportunity to kind of rebalance portfolios, trim some risk, those type of things, raise a little bit of cash, because we're going to get some type of pullback here. The only question is, how big is it? Is it a mild pullback here to 57.50, or is it something that gets us down into the 5,600 range? I don't know. We'll see. But, historically, these pullbacks need to happen when you're this egregiously kind of overbought on multiple levels. Now, feeding into that, of course, is the volatility index, and we are very close to triggering a buy signal on the VIX. So we've had this so here was April 6th. You had this massive spike in volatility. You've completely reversed all that. We were down below 19 on Friday. So again, you've completely reversed all that volatility. So you're seeing a bit of a pickup today in volatility because of this Moody's debt downgrade. So you're seeing a bit of a pickup there. If we trigger a buy signal, we could see a move higher back potentially into the 20s here. That would coincide with a little bit of a bigger drawdown in the market. So again, we need to have this correction. The correction is healthy, particularly after this run. We need to work off those overbought conditions. The volatility index is telling us that we're probably getting pretty close to the point that that's going to happen. So again, whether or not today's sell-off kind of feeds into a couple of days of sell-off or 2 or 3 days of pullback, whatever it is that works off some of that condition, we'll see. But as long as we can maintain the VIX, in the low 20s, markets don't start breaking any type of major supports, this will be a sort of a corrective pullback that we need to work off those conditions, give you a little bit better entry point into the markets. Crude oil, last week we sold our crude oil positions on, I think, Thursday. Crude oil's gotten very, very kind of oversold here. We just took that risk off the table. We made some money on that on the trade in crude, so that was fine. But again, you're getting kind of close here to a potential where we could get a bit more of an advance here in oil. So oil's been trying to consolidating here a bit in this range. We had this move higher, and now we're kind of just in this flux point for oil prices. So again, just economically, we're seeing a slowdown in the markets. We're seeing a slowdown in the economy. Would expect to see that kind of reflect also back in crude oil prices. So again, that's one of the reasons that we kind of took our oil energy positions off the table. So overall, again, nothing more than just simply a corrective pullback here, but watch the VIX here over the next day or so as we kind of process this Moody's downgrade, this headline. But that's what you need to know before the bell this morning.